We had a major move in volatility that we talked about on Saturday. Please go look at that video if you want to look at some of the stuff that we were talking about, because there could be something bad happening early on in the week. You might want to check that out. But why is this overall happening, and what does it look like on the other side of the spectrum? And that's what we're going to be paying attention to today as we get you those weekly ranges and we get into some shorter time frame technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta. Looking into some AMC and GME as well. Sure thing, we're going to pop over to the dollar and volatility to see if there's any kind of reversal signals going on over there. But I think the best thing we can do for now is just get into it. Now, there is a signal in here that was bad, and it might have just got worse. So I'm a little bit worried for Monday. We'll have to see. You know, these are reversal signals. We're going to point them out in just a minute after we update you guys on those weekly expected moves. Don't worry, we're going to get into it right away. But we do have 582.76. Notice that that would take us outside of the monthly expected move for the month of September. So very unlikely to happen tomorrow, right? 68% chance to land in this area between these yellow lines. But the downside expected move is 560.18. Now, if you're a little bit new to the channel, this is a 68% zone. I calculate this using the options data. It gives us an area where the stocks are most likely to land, and we give these out for every single stock that we do cover in these videos and more over on Patreon. The link's down in the description. But 68% zone, that does not mean it is a 100% zone, okay? If we do come out of this early on in the week, it doesn't mean you have to come back down, right? If we start crashing down, it doesn't mean you have to bounce back up. We just like to look for reversal signals in these type of areas early on in the week. So that's what we pay attention to a lot over on Patreon. And then we have the daily expected move for the SPY tomorrow, 575.56 to the upside. And we do have 567.38 to the downside. Now, the key thing to understand about, yeah, we do have a slightly bigger daily expected move, but I want you to see how much bigger that weekly expected move is, right? We had a couple of small weeks there and we just kind of trickled higher, right? We made this big move, gave it up, trickled higher, trickled higher, trickled higher. So we've had that for a little bit of time. Now that volatility spiking up makes sense because the options data is pricing in some bigger moves. So I would expect some bigger swings than just going, you know, dragging this thing up over time, right? Dragging up. We are going to see some bigger swings this week is what these ranges really tell me. Now let's get into that overall pretty much bad signal that just got a little bit worse. And I'll tell you the reason it got worse. But first of all, let's point out that signal. Now, first of all, down at these lows, we noticed the divergences on the 30-minute. That came outside of the monthly. We saw that bounce. We said short squeeze is possible if you cut above this level right here around 555. We did that and short squeeze is on. And you can see that by how this just gradually goes up and your indicator is facing down. Now, you have gotten some cross-ups right here. We did have a divergence. So that is a point to pay attention for some falling down, maybe to dip down and grab some buyers. Now you have turned this signal into, hey, this is a bad signal, this could be a pullback, into this is a bad signal and this could be a pullback, but this also could be a complete reversal in trend. Okay, so this is going to be a very key thing to pay attention to. And if we actually suffer a little bit on Monday, let's say we actually see something crazy on Monday, we're actually going to get new monthly expected moves. We put those out on Patreon as well. If you want to join that Patreon, these yellow lines are going to update as of tomorrow night. So make sure if you're a Patreon member, you're paying attention tomorrow night because we have some info to give out. But this just tells me this is a pretty big reversal signal. Now I'm looking at it on an hourly. I really do like 2-hour charts. And the big thing here is on the 2-hour chart as well, what do you overall have? Well, we have a massive divergence here. You really have a huge divergence across the way. If I look at this on a 4-hour, it's probably going to look nice, but we see that little rejection there very, very close to the center line. That's the key thing you have to understand. That hourly signal, we're going to just look at this on the 2-hour. That hourly signal was about here. Yeah, that doesn't look that bad, but as it gets closer to that center line, now you're at that center line, you can go into a negative trend. So this is why this signal actually does look like a bad one that just got a little bit worse because people are FOMOing in and no selling is really hitting the tape while the dollar is not crossing down on the daily MACD. So I would really be paying attention to Monday, paying attention to what the dollar is doing and seeing if some kind of rug pull is going to happen early on in the week. If not, maybe that port workers strike is going to disrupt the market a little bit. The Qs overall are doing that formation that happens at a lot of tops, which is the SPY makes that new all-time high, and the Qs aren't able to do it. Okay, so tech stocks pricing in a very big move. Let's start off by giving you guys those weekly expected moves. We do see 499.11 to the upside. Very, very nice. It's right by 500. One thing to note about this right here would be the level of 500. Wouldn't that be quite the story to go hit 500 again? I think that would be quite something. something, and those key levels, like solid numbers like that, like 500, can act as resistance. They are a mental number in a lot of people's heads for a sell area. So we'll see if that's able to hold as resistance. It is outside of the monthly expected move. That will update tomorrow. So we do have the downside move. That is 474.39 to the downside. Okay, now one thing I'll just point out, since it's right by the daily expected move, this thicker red line that you see above that daily line, the daily expected move line, that is the annual move for the Q. So that is as high up as the options market was pricing in the Qs to go. As far as the entire year of 2024 goes, look what happened once we got outside of that earlier in the year. So let's be a little bit cautious in these areas. Obviously, we follow the signals on this channel. We trade like water, meaning at the end of the day, we can have whatever bias we want, but we need to make sure to follow our signals, because if things start curling up, we're going higher. Now, the key thing here was this signal was a bad one, right? And you see how it's up here on this MACD. That means, hey, yeah, we still have some room to that center line, so a pullback could still be here. And that's exactly what it was. And then we did this trickle up thing, and we went up, and we hit a higher area, and guess what? We made another point of divergence here, and you can see it very, very clearly. The reason that this is worse than right over here is because you are much closer to the center line. Okay, so if you're trying to be like bearish here, the bear signal is already confirmed, and most likely you're going to see some bigger time frames like a 4-hour start to curl over. What's the problem with the 4-hour? We just showed that on the SPY. Well, the 4-hour does have a divergence there on the MACD. Now, pretty flat on the RSI, so maybe this is just some kind of retest, some kind of pullback, so we'll pay attention to that. But for Monday, we can pay attention to our daily expected move. So as I flip into a 2-hour, we can look at those daily expected moves. We do have 491.54 to the upside and 481.96. That means there's a 68% chance we're going to land in this area by close tomorrow, and a 68% chance we're going to end Friday close in those purple lines. Okay, so this is something I'm paying attention to. This looks like, if I was seeing this, right? If I was seeing this down here for a bounce, I would be saying the same exact thing, okay? The same exact thing is what I would be saying if I saw this type of signal. So I would really be paying attention, because these can cross over daily charts. The problem with daily charts in these areas are you're still within range of going into that negative trend. You solidly go into negative territory here, you might be chopping out this low and going to test the bottom of our channel. You test that channel, you bounce up for a second, maybe a dead cat, and then you drop again. You're breaking that, and we are officially in a downward trend on the daily, if not weekly scale at that point. So this is a key time to pay attention. You have a signal that just went from bad to worse, so it is key to pay attention to this early on in the week. And we are going to be live tomorrow morning. I had a weird schedule last week, but this week we are ready to go. Now, you guys know I like my 2-hour charts, and we're really paying attention if Apple can curl up on this 2-hour chart, because you have a massive cup, a massive handle, and if that would just curl up into positive territory, that would be a very bullish thing. So that's a very bullish case for Apple right now, able to curl up on a 2-hour into positive territory, but I just want you to notice how that hasn't done that yet. So that's key to understand. And if you're paying attention, if this wants to fall further down, maybe retest 225.84, get back in this zone, or see something ugly, well, the hourly chart would probably be your friend there, right? If we experience some negativity, we get a solid red bar closing like that early on in the day, you might be heading down towards a weekly expected move downside. That is why you need that Patreon, right? The Patreon will really help you out. Or you can take the course, the Using Indicators course, down in the description for $100 right now, 90% off. And you can take that, and then I'll teach you how to make a range for any stock that you are trading, right? That is in that course. So right here, we want to pay attention. Obviously, it would just be hourly turns down. That's a bad sign. The 2-hour turns up. That's a good sign. Now this hourly, if the hourly turns down and then you see that curl back up, and then the 2-hour is able to cross with it, then you'd want to pay attention for upside as well. I just wanted to be very clear about that. It doesn't mean when I say this could turn down and that will be bad, it could be bad for a matter of a few hours and then just turn back up. You always want to be trading like water. You always want to be managing those trades. That's how we teach you how to do things around here. Don't think that we can't violate a lot of these sort of bearish signals, because Tesla is doing exactly that. It had the bad signals. It needed to drop. It was outside of a weekly move. And what happened? It just goes up and up and up and up and up. Now, very interesting here that Tesla is the one seeing this massive move, because it has curled up on a monthly scale, right? That could complete as of tomorrow. So pay attention, because Tesla's actually saying, hey, I might be a good investment for 12 to 24 months, 12 to 18 15 months, 12 to 24 months. So pay attention. But for the most part, as we click into an hourly chart, we just see how every divergence gets violated. This is why we really want to pay attention to curl ups, right? Anytime that curls up, it means no chance of heading down in the near future. You need that to curl back down. So the key thing for Tesla here is this actually going to experience a pullback? Is there some kind of short seller problem? This is very interesting behavior. I know that news can come out and that can be great for Tesla and everything. And monthly is curling up. That's great. We can go into a bullish time. But this is really excited really fast, and you're kind of asking for a big drop. And the options market is pricing that in. The volatility for Tesla this week, the implied volatility for Tesla this week is almost 100%. So it might mean this is something you want to take with a little caution. This type of move can get people really, really excited. And yes, that monthly has crossed, but usually when the monthly does cross, it goes through it experiences some kind of consolidation on, say, a 2-hour or even a daily chart before it's actually able, most of the time it's on a daily chart, before it's able to actually turn up into positive territory again. So that is something I'm paying attention to. Tesla's one that seems like a lot of people want to be in this guy. So if it does dip down like this, or even further, get some kind of test down here and curl up, hey, I'll be in that play. But for now, Tesla looks like, hey, there's not a lot of great signals here. You have a divergence forming right here, but that easily can be violated. We violated it a ton. So taking downside for Tesla ended up being a little bit difficult. I had to manage a trade here, and I did take a slight loss because I did short Tesla a little bit. And then I said, uh-oh, that turned right back up. So I need to get out of that trade, right? I'm not someone who's perfect. I don't know exactly where a stock is going at any time. I actually know that a stock can go up or down at any time. So I'm paying attention to when I need to manage that trade and admitting that I'm wrong. It's part of being responsible. It's part of taking accountability for your trading. Highly encourage it. But these signals for Tesla overall look very, very bullish. I think that a daily pullback would be nice, right? A daily pullback to that center line and then curls up into positive territory, maybe with earnings, would be a good sign for more positivity. Amazon on the bigger time frame here, I just wanted to show you have to be paying attention to if those dailies do cross down. Notice we weren't able to do it here, and then we rejected, turned right back up, so that was great. If you're swing trading, this is just a fantastic play, but we can notice here that we have the potential to drop down. If we just get one more solid red day for Amazon, you're dropping down. Now, that doesn't mean you have to go fully negative. You can curl back up into positive territory, but if we were going to break down, I really like this level of 170, a 170.50, something like that, because you come down to this area, react back up, and you create that good structure to head down. I just wanted to point that out to you today before the market opens tomorrow. Now, as we go into something like a 2-hour chart, the reason I'm paying attention for that daily chart to curl down is because the 2-hour chart showed us divergence. Now, this was another very obvious play. You see that, you see the downward move on the MACD, you see the flatness on the RSI. It says, hey, this still does have potential to be a pullback. So I'd be paying attention to, hey, this signal already has played out. If that daily crosses, worse things can happen. But if that daily doesn't cross, that means this 2-hour might turn back up. If that 2-hour turns back up, where is it? It's in positive territory, meaning this trend can continue. You can take out this high, go make a new one. That's why we have a weekly range. So that's something I'm paying attention to for Amazon. If that daily crosses over to the downside, I'm going to say that's a bad thing. So I'm going to be watching the 2-hour throughout Monday, seeing if that thing can turn back up and buy us a little more time for this. Hopefully we don't pop up for a second, right? Pop up for a second, make another divergence point, and then fail for Amazon. And Nvidia did exactly what we were talking about, which was testing that 125 level. It went a little bit higher, but overall, if you were paying attention to our videos, we were talking about creating a 2-hour divergence here. And what have you created? You've created a 2-hour divergence here. And you do see there is divergence on the MACD and RSI. It's not the biggest divergence in the world, right? Not the most significant in the world, but it is one to pay attention to. And so when I see this, that is a bad signal. So if the 2 hour is able to curl up, or an hourly chart's able to curl up, that would be your bullish thing. Maybe you go test this high, go make a new one. But the bearish thing here is going to be the daily scale. If the daily scale is able to turn over the next couple of sessions, then that 2 hour was signaling, hey, this is a potential top. So that is a signal you see at potential tops. You are hitting a key level. You can't break through the trend between those highs. Okay, so if that daily does cross and we go into negative territory, we actually might take out this level and go make a new one. So I'm still paying attention to 95.63. That would be a massive move. So we're still looking for those type of signals, but I just want to be clear here, that's a 2-hour signal that does curl down daily charts here for Nvidia. So it tells me watch the daily. If the daily turns down, that means bad things. But if the hourly or 2-hour can curl back up, we might have bought a little bit more time and maybe we're just heading up from here. AMD on the daily scale did something great, right? It came up to this level. I really thought we were going to hold some resistance. That's really what I thought at 160.83. Didn't hold, popped up for a second. Now we might need some kind of little retest. So if you're wanting this to remain bullish, because it did break out of a massive, I would say, triangle, you'd really think a 2-hour retest would be nice, but if it curls over this daily, that's going to be a bad sign. Curls over the daily, you're close enough to negative territory where 3, maybe 2 days worth of selling, you might already be starting to go negative. So I'd really be paying attention to that for AMD to the downside, but this is a fantastic move. These are bullish moves. So we're overall saying, hey, what's going on here? Is this going to curl down for some kind of pullback? Well, as you look at the charts here, as you look at the MACD and RSI, that is, you don't necessarily see the same exact signals as Nvidia, right? We saw the signal here that curled up, managed to trade, because obviously this is heading up from there, right? The divergence here did not fully play out. It did complete, it just didn't fully play out. So what we want to pay attention to at this level is a 2-hour pullback. That is the most likely scenario for AMD with this type of look. You have a 2-hour that's very high up in positive territory, so some kind of retest does make sense. See if that can get by that center line and turn back up into positive territory. I think that's the key thing to pay attention to for AMD. Meta is kind of your outlier. I might just have to look at if this is some kind of Wyckoff and some kind of look of Wyckoff here, but I'll look at that tonight after this video. What we're paying attention to here is the fact that this is a great move. It's a fantastic move. The only problem with it is it's getting a little overzealous at this point if you head higher, because this really needs some kind of daily pullback. You see that we're overbought. We've gotten more overbought before, right? We've gotten more overbought before, but that was with something like earnings. So earnings is a little bit down the road. So if that wanted to pull back before earnings, that would be an overall good thing for the stock. Curl down to that center line. No divergences here for the daily scale. So curl down, get to that center line, turn up into positive territory, and we have ourselves a very simple swing trade to the upside. The only thing is we have to be very careful if it comes around earnings, because that's overall a 50-50 flip. As I look into a 2-hour, you guys are going to see there's not really any reversal signals here. You're seeing the squeeze behavior. So squeeze-like behavior on your MACD is going to be if this didn't make a divergence but just kept moving down, right? Just kept moving down while the stock moves up. That's kind of a signal that people are maybe getting trapped at the top here. So we're paying attention to it. Anytime that 2-hour does cross up, though, you can see more positivity. I wanted to be clear about that. So right now I'm paying attention for looking for Meta for a future trade if there's some kind of daily pullback, but also paying attention to a 2-hour if that wants to curl up early on in the week. I'm in the thinking to pay attention to AMC and GME because we're getting closer and closer, meaning this line right here. You notice I've updated that line to see something crazy. Most people who are paying attention to this want to see something crazy. We have violated this to the downside, so downside is the most likely option. We are in negative territory in a negative trend. We have not confirmed any divergence. We actually got rid of those points of divergence down there. So what we need to be paying attention to is if that daily crosses. We want to keep it very simple with something like AMC and GME. If that daily scale does cross up, we can see positivity. And the cool thing about this week is this is the closest that crazy level has been. We update this for you every single week. This would take the options market off guard. It really would. 504, right? This is the closest to $5 that unexpected move is at, right? It's the closest I've seen it pretty much ever to $5, and that's a key level for AMC. So if you're able to break through that level, you can see something crazy. Now you do have a little bit different story when we get over to GME. Notice that GME made fantastic divergences down here on the daily scale, consolidating as of now. We'll see if that can break to the upside because we have updated this as well. 2480 is what you need to get above in order to see something crazy. Notice how it matches with those highs, but it is much closer than usual usual. So I would really be paying attention to GME if it gets through something like 2480, because you've already confirmed divergence down here, meaning that on the shorter time frames you could experience a 2-hour pullback. And that seems to be exactly what is happening in the indicators here. It's really telling you, hey, we got pretty high up here, we slightly got to overbought, now we need to pull back to that center line. But we're consolidating with time here, we're pulling back with time, and then we got to see if that can curl up one more time. So if a 2-hour curls up, you got a shot to break through that 2480. So that's something key I would be paying attention to for GME. Now, there were some key things to pay attention to when it came to the dollar, right? This is what we did the last time the dollar found a bottom, right? We found the 4-hour divergences right here. We found that 4-hour divergence right here. We said this could potentially be a bottom. Watch if that needs to double bottom. It double bottoms with a 2-hour divergence. That's what we were paying attention to, rejection on the 4-hour. Now, I want you to pay attention to here. What do we have? We have divergence all across this, just waiting to see if that can confirm, because if that's going to head down any lower, right, if we close down in these areas, you're going to curl over the daily scale. That's not a good thing for the dollar. But if the dollar is going to scale up here, 4 hours is going to curl up. But over here, we had a 4-hour divergence led into a 2-hour divergence. Over here, we have a 4-hour divergence that led into a 2-hour divergence, right? We see the 2-hour pretty much double bottom, kind of like right over here. This one was very, very clean. You see how significant that is. This one, I wouldn't say it's as significant, but it's just as important to pay attention to as a trader, because if people are flying into cash for some reason, that most likely means that they are selling their assets. Now, the key thing with the dollar here that you need to understand about last week is we saw higher prices again, and the dollar still did not cross down on this daily MACD, confirming another move down towards 99.41. So this is going to be something very important to watch. I would really first be paying attention to that 2-hour scale. If that starts to curl up, I'd be looking at a 4-hour chart and saying, if that 4-hour chart turns up, we could see a big flight to cash for some reason. Volatility, if you were paying attention to our videos on volatility, we were talking about this wonkiness we had here, which is some wonky divergence all along these lows down there. So you did have downward movement in the VIX reading here. You had upward movement for the MACD. You had upward movement for that RSI. So that led me to believe, hey, I need to maybe buy a little bit of volatility. That's exactly what I did last week. I scaled into a volatility play, and that started to print towards the end of the week. You guys heard me say live early on in the week that I was going to look into volatility at some point towards the end of the week. I took a small position, then I took another position. Now we're seeing that scale back up. So the key thing here is going to be, does this daily time frame turn up? And that's going to be the key thing, because you're reacting down to the 200, you're getting another daily turn up, and these daily turn ups have led to some pretty good moves, right? When they do curl up, you see some pretty good moves, reversal signals in here, so we knew that would fall down. But over here, we curled up. We never curled back down until we saw something massive. The reason you have to pay attention to daily curl ups on this MACD and the RSI getting above the center line right now is because you're above the 200 and you have the 50 above the 200, which is a major crash signal. So it tells us we're in an environment. It doesn't mean it has to happen. It tells you you have the signals. You are in the environment where something really bad can happen, and therefore you need to be paying attention to volatility turning up over the next few weeks. So the main takeaway for this video is last week we really took a bad signal, we made it worse, and that's not going to be a very good thing. At least the probabilities say that's not going to be a good thing for Monday, but can we turn that back around? That's going to be the key thing we're going to focus on throughout our live videos throughout the week, just making sure things on bigger time frames actually are turning down if we are going to see some kind of black swan or some kind of selling come into the market. So that's the key thing to understand there. Obviously, we always trade the signals, right? If we trade the signals, if we just watch the signals closely and we're always reacting, we will be in the correct move. And sometimes that move will lead to a bigger move to the downside or a bigger move to the upside, and we will make some better money on those. But we always want to be managing those trades. We always want to be managing our risk in those trades. So I just wanted to say thank you guys so much for watching. I really do appreciate it. I look forward to streaming with you guys throughout this week, and I hope you have a fantastic night. Peace.